Hi, I'm Ann Garcia, a fee-only certified financial planner. As the college financial lady, I've helped thousands of families save millions of dollars on college. Today, I'm going to talk about income on the FAFSA. Income is by far the biggest piece of the FAFSA calculation. The FAFSA assesses income at 47% in calculating your expected family contribution, or EFC. This means that every additional dollar of income raises your EFC by 47 cents. Income for the FAFSA is prior year, which means that the first year of income you'll use for your student is the tax year that began January 1st of their sophomore year of high school. Let's start with what the FAFSA considers income. It's a common misperception that the FAFSA uses your adjusted gross income. In fact, it uses your total income. This means not just your taxable income, but also your untaxed and your tax-free income. Lots of people think that increasing 401k or IRA contributions will lower their income for the FAFSA just as it does for taxes. However, that's not the case. The FAFSA requires you to add your untaxed income to your adjusted gross income. This includes pre-tax 401k, 403b, 457, traditional IRA contributions. It also includes HSA contributions and any child support or untaxed alimony, plus untaxed distributions from Roth IRAs. So don't be fooled by people who tell you that a Roth IRA is a good way to save for college. And it's not just earned income. Income from a Roth conversion counts too, as do living allowances such as those provided to clergy. When you complete the FAFSA, you're prompted to use the IRS Data Retrieval Tool, or DRT. This will connect your FAFSA directly to your tax return, and your adjusted gross income and tax liability are transferred over. Then you'll answer a series of questions that adjust your income. Mostly they increase your income because you add back a lot of income. The FAFSA asks about your untaxed income and your pre-tax contributions to retirement savings. All of those are added back to your adjusted gross income in calculating your income available to pay for college. Remember, it's only pre-tax retirement contributions that get added back. Your Roth contributions are already included in your adjusted gross income since you paid taxes on them, so don't double count them. There's a short list of things that don't count as income. Untaxed Social Security benefits don't count, nor do earnings from work study, since that's considered financial aid. The FAFSA subtracts a few big items from your income: your actual federal tax liability, an allowance for state and payroll taxes, and an income protection allowance based on your family size. Changes to the FAFSA and tax law over the past decade have really reduced the income planning opportunities available to families, but there are still some. For people with W-2 jobs, the primary planning opportunity is to pay more income taxes during FAFSA years, since your tax liability is subtracted from your income. You might do this by changing retirement contributions from pre-tax to Roth, or reducing itemized deductions in FAFSA years if you itemize. Business owners and self-employed people have more flexibility to do things like move expenses into FAFSA years to reduce income in those years. Students only report their income if it exceeds the income protection allowance, which for students is about $7,000. For most high school students, this isn't an issue. Student income above the income protection allowance is assessed at 50%, so a student with $8,000 of income would have $1,000 in excess of the income protection allowance, and that would increase their EFC by $500. Divorced parents should remember that the FAFSA only considers the custodial parent's income. Currently, the custodial parent is the one the student spends the most time with, but with the FAFSA simplification in 2022 or 2023, that will change to the parent who provides the most financial support. The CSS profile requires both parents to report income and assets if the parents are divorced. I'm Ann Garcia, the college financial lady. If you found this video helpful, click the like button and subscribe to my channel to get notified of more content like this. If you want to learn more about the FAFSA or anything else related to paying for college, visit my website, thecollegefinanciallady.com, where I've got tons of info on everything from the FAFSA and merit scholarships to saving strategies, appealing a financial aid award, and tax credits. Lastly, if you want to map out a detailed financial plan for your family's college education, there's a discount code at the end of this video for my College Financial Plan Masterclass, which you'll find on my website.